Hello, welcome to European Open Briefing for Monday, November the 5th. I'm Rafa Bayajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we're seeing a bit of unwinding of Friday's moves this morning. We do have a slight risk of sentiment. So those earlier hopes of a quick China-US trade deal have subsided somewhat after US officials played down the chances of an early agreement on their trade dispute, but the dollar is seeing broad support on the back of that stronger than expected US jobs report we saw on Friday. The dollar index marginally lower at 96.51 at the moment. Dollar yen slightly higher at 113.21. If we have a look what's happening with stocks, we can see Asian indices ended the day lower. Europe also having a tough start to the day, and on Friday Wall Street did close. Stocks gave up early gains to end the day lower as the disappointment of a quick US-China trade deal weighed on equities. There was also a bit of caution ahead of the US midterm elections. That's tomorrow. If we have a look at what's happening with European currencies, the euro is having a subdued start to the week, currently trading at 1.1380 against the US dollar. Sterling slightly higher, hovering around the 1.30 level. There's been several reports regarding what's happening on the Brexit front. We saw the pound earlier jumping to 2-week high before falling back a little bit. Having a look at the risk-sensitive Australian dollar, it is more or less flat at the moment at just below the 0.72 level. Kiwi also slightly lower against the US dollar. Both currencies did reach a 5-week high on Friday on the back of that risk on sentiment on hopes of a US-China trade deal. But the risk of sentiment on today, as well as some disappointing data, is weighing on both currencies. Having a look at commodities, though, we can see oil prices are down despite the fact that the sanctions on Iran come into effect today. The US has given waivers to 8 countries who will be able to continue to buy Iranian oil temporarily, so that has eased immediate concerns of a supply shortage. We're seeing WTI falling to 7-month low, Brent at a 2.5-month low. We can see oil is the worst performer this morning. Pound is the best performer on the back of those Brexit speculation. But before we go into the pound, let's have a look at what's happening to the dollar-yen pair. We can see we did see a bit of a rebound on Friday after that strong US jobs report. We saw the US economy adding 250,000 jobs in October. Forecasts were 490,000. We saw US wages rising by 3.1%. That's the highest rate in 9.5 years. So on Friday, President Trump did boost expectations for an early trade deal with China, saying that the deal is getting much closer. But then we saw Trump's economic advisor Larry Kudlow playing down the rumors, saying that contrary to what had been reported, Trump had not asked the cabinet to draft a trade deal. He said that he also setting low expectations for the Trump President Xi meeting at the G20 summit. So all of that somewhat weighing on sentiment this morning. Let's now turn to sterling. We can see that spike to 2-week high 1.3062 at the start of Asian trading. The main news that most traders were focusing on was a Sunday Times report saying that a deal with the EU is almost done, and that the EU has agreed to an all UK customs deal that would solve the Irish backstop issue. But then Downing Street said that that is just speculation. It would not confirm it. We then had other reports saying that a deal on financial services, which was first reported last week, a deal is now all but agreed, but traders are remaining cautious. We did see comments from Irish politicians saying that the EU will not agree to the backstop being time limited. UK insists on the backstop, Northern Irish backstop being time limited, so that means that a deal could still be some time away. But hopes are rising that a deal by the end of November could be done. Sterling is currently trading around 1.30 against the US dollar. And a quick look at the Australian dollar. We can see that rally to 5-week high on Friday, touching $0.7258. But as those hopes of a trade deal with China subside, we're seeing Aussie pull back to around 0.72. We're also seeing some disappointment over services PMIs for October, both out of China and Australia, and also perhaps some caution ahead of the RBA policy decision that's due early tomorrow morning. We did see fairly soft inflation numbers out of Australia for the third quarter, so perhaps the RBA could sound a little bit less optimistic about the inflation outlook in its statement. That could possibly weigh on the Aussie. We also have the Reserve Bank of New Zealand policy meeting later this week as well. And having a look at what's coming up later on, we're going to have UK services PMIs and the ISM non-manufacturing PMI out of the US. That's it for me. Thank you very much for watching and have a great day.